Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. When I started this channel 7 months ago, Tesla stock was in the mid 300s. One of the first videos I made was an unsubtle warning that waiting for Tesla stock to dip before buying was a really dumb idea. If, like me, you believed that the company would continue to execute its plans and thus the stock would trend up higher over the long term. My point at the time? To wait would be to voluntarily introduce unnecessary risk. Why bet against the inevitable? Sure, waiting could work, but why add risk by hoping for a dip? Hope is not a strategy. At the time, I saw Tesla stock as incredibly undervalued, misunderstood, and misrepresented. While Tesla was growing sales, revenue, and production capacity at astonishing rates, constructing its China Gigafactory in record time, innovating and optimizing, shaming the efficiency, performance, features, and safety of every other vehicle out there, improving range and performance over the air, adding new features over the air, and pulling further ahead in the race to solve full self-driving, the finance media was full of bears, shorts, and bitter alcoholics with low self-esteem trashing the company, claiming they would never make a profit, suggesting there was no demand, warning that the competition was coming, that Elon Musk is an incompetent CEO, that there was accounting fraud, and all sorts of other easily refutable bullshit. This sea of misinformation artificially suppressed the stock price, and as I went on to explain, it was only a matter of time until the sluggish finance media and general public would start to see what was already blindingly obvious to myself and everyone who had taken the time to go deep and do the work. The undeniable truth that Tesla was not only years ahead of everyone else in technology, experience, and execution, but that their lead was accelerating, and this would soon be obvious to even the daftest of observers. In the 3 months immediately following the video, my predictions played out and Tesla stock ran up 160% to reach an all-time high of $917. Analysts began upgrading the stock. Bears flipped to bulls. Shorts bowed out. Tesla posted profits. Built a factory in world record time, began production early in China, began Model Y production early in the US, and continued to sell every vehicle produced. Then came the virus. Tesla's stock fell 60%, about as much as airlines. Yeah, that made sense. Not. Naturally, I made another video about what I saw happening at the time. People panicking, making decisions out of fear, uncertainty, and in many cases, unquestionable stupidity rather than based on reason, facts, evidence, and data. I also made predictions including that the masses would soon realize that it was not in fact the end of the world. Life would in fact go on, and Tesla would gain relative market share during this downturn while also demonstrating how far ahead they were, and at the same time, other automakers would scale back, delay, and cancel their plans for electric vehicles. Well, here we are a few months later. I called it. Some of you will construe this history lesson as arrogance. I'm fine with that. True or not, I actually don't care what you think about me. I'm just here to share my investment thinking, reasoning, and decisions, and I'll continue doing this indefinitely. This doesn't mean I'll always be right, but I will always be accountable. The internet never forgets. So here we are for round 3. With Tesla stock over $1,000 a share and the world finally recognizing the inevitability of Tesla's dominance in the emerging electric vehicle market, with retail investors and funds piling into the stock, and with Tesla on the cusp of S&P 500 inclusion, is Tesla stock still worth it? Let's find out. Hey guys, WeBull have a great offer for US residents. You can get up to 2 free stocks and help out the channel using the link in the description. And if you're in the UK, Australia, or New Zealand, you can get a free stock with stake. Link also in description. Let's get back to it. As I've said in the past, I don't have a crystal ball, but I do have a brain. In this video, I'll use the latter and try to deduce the most likely trend for Tesla stock over time. Spoiler alert, it's still not down. Now, if you're not a long-term investor, if you think in years, not decades, I have nothing useful to say to you. Really, I'm talking to long-term investors, not short-term gamblers. Okay? Great. Anything can happen tomorrow, next week, or next year. Short time horizons bring with them volatility and unpredictability. Over the short term, the stock market can be irrational, but long term, reason always wins, even if it takes a long and bumpy ride to get there. So let me state in no uncertain terms, short of a series of unfathomable disasters, by 2030, Tesla will be one of the world's most valuable companies, period. This will make today's $1,000 stock price look like a typo. This isn't the hope of a naive fanboy. It's the end result of deductive reasoning. A lot can be inferred about the future by looking closely at today. So let's do exactly that. The competition. What competition? Seriously, there is none. We've been hearing this for more than a decade. Today, In mid-2020, Tesla has no serious competition. Nothing else in the marketplace comes close, not even close on anything that matters, except perhaps aesthetics. Safety? Nothing close. Tesla makes the 3 safest vehicles ever tested. Fact, not opinion. Performance? Nothing close. Tesla's stats smoke everything by miles. Once again, fact, not opinion. Features? Nothing close. Who else has dog mode, sentry mode, Netflix, YouTube, games, fart mode, smart summon? No one. Once again, fact, not opinion. Value? Nothing close. Don't listen to me. Look at the data. Tesla is eating the lunch of BMW, Mercedes, and Audi on one hand, and Toyota, Honda, and Ford on the other, because a Tesla offers far greater value than anything comparable. Again, fact, not opinion. The truly pitiful sales numbers of so-called Tesla killers is further proof. They suck shit, so no one's buying them, because Teslas are so much better. Technology? Nothing close. VW's disastrous ID3 project is a great example. They manufactured a bunch of new electric vehicles which came off the production line as bricks because their operating system didn't work. Now they're spending 7 billion euros and 5 years to develop an operating system and cloud integration that Tesla mastered years ago. Let that sink in. Tesla's entire cumulative lifetime losses are less than VW is going to spend on its fucking operating system. Really? Or how about the battery efficiency of a Tesla? Again, not even close. Do you notice a trend? Tesla isn't winning on 1 or 2 metrics. It's winning on everything that matters. Everything. In the future, competition may arrive. Right now, there is none. Just a bunch of really bad jokes masquerading as a threat and dozens of empty vaporware promises from automakers who have no intent and/or capability of delivering on their promises. You don't just wake up one day and suddenly start competing with Tesla. They have more than a decade of experience in battery technology, electric vehicle design and manufacture, and software. Never mind their unassailable full self-driving data lead. Most automakers of today know how to build internal combustion engines, not software, not batteries, not electric vehicles. This is a serious problem. Everyone with any sense is trying to catch up with Tesla. But in the words of Yoda, do or do not, there is no try. It will take years, literally years of relentless, all-in focus, costly investment and determination for anyone to begin to become even slightly competitive on price, performance, technology and utility. But by then, Tesla will be years further ahead. Tesla continues to out-execute everyone at a truly embarrassing pace. Tesla is already lapping everyone and the race has barely started. Tesla today is like Google running away with search in 2000 or Amazon running away with e-commerce in 2008. When you have scientifically literate founders, superior technology, superior execution, superior innovation, superior data, superior talent, a focus on long-term growth, and an exponentially growing lead, it's really, really tough to catch up, even if you want to. Today, Google is the world's biggest search engine. YouTube, also owned by Google, is number 2, and Amazon is number 3. Do you even know who number 4 is? Exactly. Tesla has no competition and none in sight. One day, this may change. Just like one day, someone might take down Amazon, Google, or YouTube. Disruptive technology. At the end of the 19th century, large cities stank of horse shit because, well, there was lots of horse shit. In fact, billions of pounds dropped daily from the behinds of horses in New York City alone, creating wonderful warm turd mountains for billions of flies to hatch and spread deadly infectious diseases. And that they did. Fast forward a few years and suddenly no more horse shit. Instead, gasoline fumes. In historical terms, cars disrupted horses overnight. Flat-screen TVs disrupted tube television in a flash. Smartphones came out of nowhere, and today, most of us feel naked without ours, from a rich person's toy to a life essential in no time at all. The point is, electric vehicles too are a hugely disruptive technology. Netflix killed Blockbuster. Digital photography killed Kodak. EVs will kill ICE. We're in the early deceptive stages of a seismic disruption. EVs capturing 1, 2, 4% of new vehicle sales doesn't look like much in isolation, but that's where thinking comes into play. The market ain't staying that size. Declining costs equals expanding market. The most expensive thing in a Tesla is its battery, followed by the computer. Well, what do you know? It turns out the cost of both of these high-priced items are predictably declining over time. This means the cost of Tesla's products too will predictably decline over time. This means cheaper purchase prices and/or higher profit margins for Tesla. Tesla is already selling every vehicle it makes at today's prices with today's performance and features, and doing so very profitably. The true cost of ownership of a Tesla today is at price parity with an internal combustion engine vehicle. It doesn't take a genius to figure out that if the cost of these superior products continue to fall over time, the market for EVs will continue to grow. In fact, EVs will account for around 100% of new vehicles before you know it. This is an economic inevitability, not a deluded fantasy. Today, Tesla is the world's leader in EVs by sales volumes. They produced twice as many electric vehicles in 2019 as anyone else, and by value. The S, 3, X, and Y are each in a class of 1. Their technology is light years ahead. What's more likely? That Tesla continues to gain customers as the underlying EV market grows, their products become cheaper and better value, and their technology continues to improve rapidly? Or that Tesla begins to lose market share to demonstrably inferior products, despite the underlying EV market itself exploding in size? I mean, really. Tesla is already approaching industry-leading margins, not for electric vehicles, but for vehicles, period. This trend will continue. Their products are unequivocally better than anything else available, not by a little, by light years. Tesla has an army of fanboys, fangirls, fan everything, singing their praises, giving friends test drives, and promoting their products for free because they're so good, they sell themselves. There's no credible person on the planet who could say with a straight face that there is anyone else out there with better battery technology, better software skills, better data, or more EV manufacturing experience than Tesla. On all of the most important fronts, Tesla is winning. They've demonstrated an incredible pace of innovation, optimization, and an intense focus on finding new efficiencies. Gigafactory Shanghai was built for about 65% less capex per unit of capacity than their US facilities, and in world record time. Please think about this for a moment, guys. Tesla is better than everyone, even at building factories. And today's magic word is extrapolate. Model Y has been optimized so much it has almost identical range to the Model 3 despite being 10% more massive. If you know physics, you know this is insane. Model S has seen an almost 20% range increase in the past year based on continual optimization, not a bigger battery. While automakers are in stasis, Tesla is relentlessly seeking new efficiencies everywhere. Tesla is an optimization machine and its margins are marching steadily towards 40%. It's easy to miss this if you don't look at the data, but it's incredibly important. Tesla's track record matters. The trend is your friend. Software is becoming an ever larger piece of the pie and in time will become a huge profit center for Tesla. Software, after all, is super high margin revenue. Don't forget, when autonomy is solved, infotainment becomes everything. When you no longer need to pay attention to the road, oh boy. Software purchases, games, apps, and subscriptions will open the software revenue floodgates. Those who think Tesla is an automotive company are gravely mistaken. And I haven't even touched on Tesla Energy. Its solar and battery business today are blips on the radar, just as Tesla's EV business was a blip on the radar in 2010. But don't sleep on Tesla Energy. This decade, it's likely to grow to be around half the size of Tesla's total business. Serious stuff. Today, Tesla owns EVs. Tesla is EVs. Tesla has a huge lead in technology, experience, and data. It would take an unimaginably colossal effort for anyone to become a serious threat to Tesla in the 2020s. Tesla has won the entire decade. Mark my words. I know there's a few of you ready to explain in the comments how anything could happen, true, or that it's impossible to predict the future, also true, or ready with questions like, did you think about this? What if that happens? I'm not here to convince you. This video is about probability, not certainty. What's likely to happen, not what will happen. I've articulated my theses on most aspects of Tesla in the 80+ videos I've posted on this channel since November. You may notice I'm awfully quiet on 99.99999% of topics. I prefer to speak only when I have something to say. I've gone so far down the Tesla rabbit hole that my research has effectively become a time machine. I use it to see into the future. So, is Tesla stock still worth it at $1,000? Good question. Go build your own Tesla time machine and visit 2030. That means research, guys. Lots of it. Go deep. Don't listen to me. Don't believe me. Don't accept my conclusions. Do the work yourself. Think for yourself. Reason for yourself. How do you know when the work is done? Easy. When you arrive in 2030, open the door of your time machine and can see clearly what's outside. And don't forget your free stocks with WeBull and Stake. Links in description. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. Thanks so much for watching. Let me know your thoughts in the comments below. Are you buying Tesla stock over $1,000? Where do you see the stock price in 2030? Are you a long-term investor or more of a casino person? And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like to access exclusive videos, regular Q&As, behind the scenes content and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description, and you can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. Either way, the best form of support is you being here and watching, so thanks again.